Welcome back to Financial Freedom Journey. Today, we're diving into the fascinating world of surprising money facts that everyone should know. You might think you have a solid grasp on finances, but prepare to be amazed by some unexpected insights that could change the way you view your money. From the psychology behind spending habits to the hidden costs of everyday purchases, we'll explore a variety of intriguing facts that can empower you to make smarter financial decisions. Whether you're a budgeting novice or a seasoned investor, there's something here for everyone. So, stick around as we uncover these eye-opening revelations that could help you save more and spend wisely. Get ready to challenge your perceptions and discover how these surprising money facts can impact your financial future. The power of compound interest. Compound interest is often referred to as the eighth wonder of the world, and for good reason. It's the process where the interest you earn on your savings also earns interest over time, leading to exponential growth. For example, if you invest $1,000 at an annual interest rate of 5%, after 20 years, you could have over $2,600 thanks to the magic of compounding. This means that the earlier you start saving, the more your money can grow. Imagine if you started saving just a few $100s a month in your 20s. By the time you retire, you could have a substantial nest egg. So don't wait. The sooner you begin to save and invest, the more you can benefit from compound interest and secure your financial future. The cost of credit card debt. Credit card debt can be a financial trap, often hiding costs that many people overlook. With average interest rates hovering around 16 to 20%, it's easy for debt to accumulate quickly. In fact, the average American carries about $5,500 in credit card debt, which can lead to thousands of dollars in interest payments over time. This burden can hinder your ability to save and invest for the future. To manage and reduce credit card debt, consider strategies like creating a budget, prioritizing high-interest debts, and exploring balance transfer options. Additionally, making more than the minimum payment each month can significantly reduce the total interest paid. By understanding the hidden costs of credit card debt and taking proactive steps, you can regain control of your finances and work towards a debt-free future. The Millionaire Next Door. The concept of the millionaire next door challenges the stereotype of wealthy individuals living lavish lifestyles. In reality, many millionaires are everyday people who live frugally and prioritize saving over spending. They often drive modest cars, live in average neighborhoods, and focus on building wealth through smart financial habits. Surprising statistics reveal that nearly 80% of millionaires are self-made, and many accumulate their wealth through disciplined saving and investing rather than high incomes. For instance, studies show that millionaires typically save at least 15% of their income. By adopting similar habits, like budgeting, avoiding debt, and investing wisely, you can pave your own path to financial success. Remember, it's not about how much you earn, but how much you keep and grow that truly matters in building lasting wealth. The impact of inflation. Inflation is the rate at which the general level of prices for goods and services rises, eroding purchasing power over time. Historically, inflation has fluctuated, with periods of high inflation in the 1970s leading to significant price increases. For example, a loaf of bread that cost 25 cents in the 1970s now averages around $2.50. This illustrates how inflation can diminish what your money can buy. To combat the effects of inflation, it's crucial to invest your money rather than letting it sit idle in a savings account. Investments in stocks, real estate, or other assets have the potential to outpace inflation, helping to preserve and grow your wealth. By understanding inflation and taking proactive steps to invest, you can safeguard your purchasing power and secure your financial future. The psychology of spending. Our emotions play a significant role in our spending habits, often leading to impulse buying. Common psychological triggers include stress, boredom, and the desire for instant gratification. For instance, many people shop as a way to cope with negative emotions, resulting in purchases they later regret. To combat this, practicing mindful spending is essential. Start by creating a budget that outlines your needs versus wants and set limits on discretionary spending. Additionally, consider implementing a waiting period before making non-essential purchases to evaluate whether you truly need the item. Reflecting on your own spending behaviors can also provide valuable insights. Ask yourself what emotions drive your purchases and how they align with your financial goals. By understanding the psychology behind your spending, you can make more informed decisions and cultivate healthier financial habits. The importance of emergency funds. An emergency fund is a savings buffer set aside specifically for unexpected expenses, such as medical emergencies, car repairs, or job loss. Having this financial safety net is crucial for maintaining stability and peace of mind. Statistics show that nearly 60% of Americans cannot cover a $1,000 emergency expense without borrowing money. This highlights the importance of being prepared for the unexpected. Ideally, your emergency fund should cover 3 to 6 months' worth of living expenses, providing a cushion during tough times. To start building your own emergency fund, consider setting aside a small amount each month, gradually increasing it as your financial situation improves. Automating your savings can also help make this process easier. By prioritizing an emergency fund, you can protect yourself from financial stress and ensure you're ready for whatever life throws your way. Conclusion. In this video, we explored several essential financial concepts, including surprising money facts, the power of compound interest, the hidden costs of credit card debt, the habits of everyday millionaires, the impact of inflation, the psychology of spending, and the importance of emergency funds. The key takeaways are clear. Understanding your finances can empower you to make smarter decisions, save more effectively, and build lasting wealth. We encourage you to take action by subscribing to our channel and liking this video to stay updated on future content. If you found this information valuable, please share it with friends and family who could benefit as well. Don't forget to explore our related videos for more insights on personal finance. Together, we can navigate the path to financial success and security.